You think you're in control of your money? Think again. Hidden forces in your brain are sabotaging every financial decision you make. By the time you finish this video, you'll never look at your bank account the same way again. This is the psychology of money and why your instincts are lying to you.
Today, we're exposing the invisible psychological traps that turn smart people into terrible investors. From emotional roller coasters to mental shortcuts that backfire, you'll learn why humans are wired to lose money and how to rewire your brain. Stick around, because the truth might just save your future.
Checking your portfolio daily? You might want to rethink that. Studies show investors who do this lose 50% more money than those who don't. Why? It all boils down to fear and greed. When you're glued to those numbers, your brain goes into survival mode. Winning feels like breathing, like you're on top of the world. But when the market dips, it's like a punch to the gut. You feel that loss deeply, almost like a threat to your very existence. This emotional roller coaster clouds your judgment, leading to rash decisions. Instead of chasing every fluctuation, take a step back. Invest with a clear mind and let your money work for you, not against you.
The stock market is a ruthless game, and it doesn't care about your emotions. When panic sets in and you start selling off your shares, guess what? You're handing over your hard-earned money to those who thrive on fear. It's like a chess match, and every emotional move you make is a checkmate for the savvy investors watching from the sidelines. And then there's the hype. You see everyone jumping on the latest trend, and suddenly, you're swept up in the frenzy. But remember, the market is designed to exploit that excitement. By the time you buy in, the smart money has already cashed out. So, what's the secret? Stay calm, stick to your strategy, and don't let your feelings dictate your moves. The market is a machine, and it runs on logic, not emotions. Play it smart, and don't let the market play you.
Which one's controlling you? We'll reveal the answer after the break.
Did you know? The average investor underperforms the S&P 500 by 4% annually. Why? Overconfidence. We'll break down the data in 60 seconds.
Here's a hard truth: you're not Warren Buffett. Yet, a staggering 80% of millennials think they can outsmart the market. This isn't just optimism, it's a classic case of the Dunning-Kruger effect. The less you know, the more confident you feel. It's like thinking you can ace a test without studying. Investing isn't a game of luck, it's a complex world of research, strategy, and experience. Those who succeed have spent years honing their skills, analyzing trends, and learning from mistakes. So, before you dive into the stock market with blind confidence, remember, knowledge is power and humility is key. Embrace learning, and maybe one day, you'll be closer to that financial wisdom.
But sure, keep trusting that Reddit thread.
The biggest mistake you're making? It's not what you think. And it's coming up.
Your brain is wired to prioritize immediate rewards over future gains. A Yale study showed that most of us would choose $50 today instead of waiting for $100 next year. It's a classic case of instant gratification. But here's the kicker: if you had invested just $100 in the S&P 500 back in 1980, that money would have grown to over $3,000 today. That's the power of patience and compound interest. It's a stark reminder that delaying gratification can lead to incredible rewards. So, while your brain might scream for that quick cash, remember, sometimes waiting is the smartest investment you can make.
Time is the ultimate wealth hack. But we sabotage it by chasing quick wins. Want to know the one thing rich investors do differently? Final chapter. Now, the secret to successful investing isn't just intelligence, it's behavior. Nobel Prize-winning research reveals that the best investors excel in 3 key areas: patience, humility, and a straightforward strategy. Patience is crucial. It's about waiting for the right opportunities and not getting swept up in market noise. When everyone else is panicking, a patient investor stands firm, knowing that time can turn a good investment into a great one. Then there's humility. The best investors recognize their limitations. They understand that they don't have all the answers and are open to learning from their mistakes. This mindset allows them to adapt and grow, avoiding the pitfalls of overconfidence. Finally, a brutally simple strategy is essential. Complexity can lead to confusion and costly errors. Instead, focus on the fundamentals, research, diversify, and stick to your plan. Master these 3 traits, and you'll find that success in investing isn't just about what you know, but how you behave. Set it. Forget it. Let math do the work. Your future self will thank you. Money isn't just about the numbers in your bank account, it's a game of psychology. When FOMO strikes, pause for a moment. Are you investing with a strategy, or are you just gambling on the next big trend? The truth is, the market reflects our emotions, fear, greed, excitement. Every decision you make is influenced by your mindset. Are you chasing quick wins, or are you building long-term wealth? The 1% know how to play this game, manipulating our impulses to keep us in a cycle of anxiety and impulse. So, take a step back. What does your financial mirror reflect? Are you in control, or is your mind leading you astray? Break the cycle. As we wrap up today's journey, remember that every video is a chance to learn something new and connect with others. If you found value in what we discussed, consider sharing it with someone who might benefit too. Engaging with content is more than just watching, it's about sparking conversations and inspiring action. Take a moment to reflect on what resonated with you today. Maybe it's a new idea to explore or a challenge to tackle. Your thoughts matter, so drop a comment below and let's keep the dialogue going. And if you enjoyed this, don't forget to like and subscribe for more insights. Your support fuels our passion to create and share. Until next time, keep questioning, keep exploring, and keep growing.